Ladies and gentlemen, good day and welcome to the Transformers and Rectifiers India Limited Q2 FY26 earnings conference call hosted by Nuvama Institutional Equities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shubhadeep Mitra. Thank you and over to you, sir.
Thank you, Bhumika. On behalf of Nuvama Institutional Equities, welcoming you all to the 2Q FY26 results call of Transformers and Rectifiers India Limited. We have with us today the senior management of the company represented by Mr. Satyen Mamtora, Managing Director, and Mr. Chanchal Rajora, Director of Finance. I will now hand over the call to Mr. Satyen Mamtora for his opening comments. Over to you, sir.
Good afternoon, ladies and gentlemen. A very warm welcome to all of you and thank you for joining us on our Q2 FY26 earnings call. It is a pleasure to connect with you and once again as we continue our journey of transformation and growth. Earlier on Saturday, our board of directors approved the financial results for the quarter ended September 30th, 2025, which have been submitted to the stock exchanges and published along with the investor presentation. Let me share some key highlights and developments of the quarter. During Q2 FY26, our revenue stood at 460 crores with an EBITDA of 65 crores. The revenue during the quarter was lower primarily due to temporary operational challenges. Firstly, there was a shortage of key raw materials, particularly CTC, and this led to clearance delays and impacted production schedules. Secondly, heavy rainfalls across several regions affected manufacturing sites and readiness, leading to deferred deliveries of high-value projects and resulting in elevated finished goods and work-in-progress levels. Margins were also impacted this quarter mainly due to delivery of the last batch of older or low-margin orders and effect of fixed costs on reduced revenue. Despite these short-term challenges, the fundamentals of the business remain strong. The company continues to execute its capacity expansion and backward integration projects as per plan. The Moria facility is progressing well, while Changular expansion is slightly delayed due to monsoon and equipment delivery issues. It is expected to be operational in the next quarter. We deliberately moderated fresh order intake on H1 to align with the extended delivery schedules and capacity planning. However, we expect a strong order inflow in H2 with a robust pipeline of opportunities exceeding around 8,000 crores. For the full year, we remain confident to achieving at least 25% revenue growth over FY26 with target of around 2,600 crores with an EBITDA margin of approximately 16%. Before I conclude, I would like to address the matter related to the World Bank project that has surfaced recently. The project in question dates nearly back 4 years back and pertained to transformer supplies made to TC in Nigeria, which was completed successfully with all payments received. This was a World Bank funded project and we have not received any communication from World Bank post 2023 in relation to it. We would like to reiterate that none of our current or under discussion orders are funded by World Bank. As process-driven organization, corporate governance and compliance remain at the helm of everything that we do. This commitment enabled us to declare our audited results within just 8 days of quarter close, a testimony to our discipline and transparency. On behalf of the entire leadership team, I would like to thank all our customers, employees, suppliers and investors and board members for their continued trust and support to the organization. Together we are building future-ready organization poised for global leadership in the transformer industry. I am pleased to inform you that Chanchal Rajora has been elevated as Director of Finance with a larger capacity and I hand over. Chanchal has been elevated as Director of Finance, who will be looking after the finances of all our projects. And with a larger capacity, I hand over him now to take through you the financial details. Chanchal.
Thank you, sir, and good afternoon to everybody. And I know that today, when you all are here, you must be having lots of questions about the company and company's performance. We will be happy to address all of this. Thank you, Satyen sir, for the strategic overview and the continuing leadership during what has been a period of steady execution and relentlessness. I'm also pleased to share that I have been elevated as a Director of Finance with the company, and I would like to sincerely thank to the board and management of the trust and opportunity extended to me. It's an honor to continue contributing the Trident's journey and for the strength and sustainable growth. During the quarter, our standalone basis revenue operations stood to 428 crore rupees compared to 446 crore rupees of Q2 FY25. The moderation was primarily due to the temporary supply side constraint and the deferred projects delivery. I'll be explaining them further during this call. EBITDA comes to 42 crore rupees against the 76 crore rupees Q2 FY26, with the margin affected by the execution of the lower margin orders and also the lower capacity utilization, as well as the delay in the deliveries to particular PSUs because of the non-readiness of the sites. Profit after tax is to 17 crores. Whereas in console basis, revenue from the operation is stood as 460 crore rupees compared to 460 crore rupees of Q2 FY25. EBITDA comes in rupees 65 crore rupees in Q2 FY25, and the profit after tax is to 37 crore rupees, right? A very unique feature in this quarter is that all our subsidiaries are doing excellent, giving excellent results, and the profit from the subsidiaries are increasing year and quarter by quarter, which shows that company's backward integration strategy is working very well, and the manner the company is planned to come up with the backward integration facilities, that has been basically reflected in this particular quarter. Despite these near-term impact, our financial position remains very strong. We continue to maintain healthy liquidity with a current ratio of 3.45 and the efficient management of receivables and payables. Our focus on the cash flow generation, working capital optimization, and the cost control has enabled us to maintain sustainability even during a softer revenue quarter. The company's balance sheet remains robust, supported by the steady operating cash flow and the conservative leverage profiles. Investment in the capacity expansion and the backward integration are progressing as planned and are expected to contribute meaningfully to the cost efficiency and marginal improvement from next quarters. Looking ahead, we expect a significant robust H2 FY26 driven by the normalization of supply conditions, improved plant utilization, and execution of our strong order book. For the full year, we are on the track of achieving at least 25% revenue growth over FY25 with an EBITDA margin of around 16%. Our commitment to becoming a net debt-free within the next 18 to 24 months remains unchanged. Before I conclude, I would like to draw all of your attention to what just MD sir has explained about the World Bank. I would like to add a little bit on this. This World Bank funded order we have executed for the EC in Nigeria. The order quantity was 70 transformers worth of 24.7 million, and all these orders has been executed in FY22, except the 3 transformers which has got accidented during the discharges in Nigeria, which was rebuilt and resent to them in FY23-24. The 90% payment of entire transformers we had received in the FY22 itself, and the balance 10% we have received in the first quarter of this year. Right. Till at present, from our order book, we don't have any single order which is funded by the World Bank. Neither in our inquiry book any order which is being funded by the World Bank. As company is focused on the India growth story, company wants to contribute main to Indian growth. We don't intend to increase our exports also, and we don't increase to extend any of the project which is funded by any of the authorities like World Bank or Asian Development Banks. In conclusion, I would like to thank our investors, board members, and the team members for their continuous confidence support. We remain firmly focused on financial discipline, sustainable growth, and the long-term value creation to all our stakeholders. With that, I conclude my remarks and thank you all once again for joining us. And now we'll all let the floor open for the questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Piyush Kumar from Magnus Hathaway Investments. Please go ahead.
Yeah. Hi, am I audible?
Yes, you are, Piyush.
Yeah. Hi, sir. Good afternoon. So, sir, my first question is regarding the inquiries under negotiation. So currently, as of Q2, we have around 18,700 crores of orders under negotiation. So can you just shed some light from which sectors and industries are these orders coming from mainly?
So these are mainly from national utilities and state utilities. Some of them are from JETCO, some of them are from PGCIL, NTPC, and the like.
All right, sir. All right. So, sir, currently we have around 5,472 crore of unexecuted order book. So can you just shed some light around over the next 2 quarters, how much can we execute out of it?
Piyush, I just addressed this issue that as we said that we are trying to basically achieve 25% over and above what we have achieved in last year. We are hoping that in this next 2 quarters time, we will be somewhere doing around 1,600 to 1,700 crore rupees of execution.
All right, sir. So just one last question on the World Bank debarment, sir. What TAREL is doing to clear its image? Because there are a lot of fear in the market around TAREL now that the World Bank is debarred. So are there any long-term consequences of this investigation?
Look, this is no investigation. It is World Bank has basically debarred us for not participating in their tenders. As of now, as I told you, we don't have any inquiries or order which is related to the World Bank. We just, as you all came to know about this last quarter, last week, we also came in the last week. We are already taking up the matter with the World Bank, and we'll be shortly replying to the World Bank on these matters. As the MD has explained to you very well that if our corporate governance and processes are not that strong, we would have not able to declare our results within 8 days from the end of the financial years. So we are very strong on our corporate governance side and our processes side. We are taking up with the World Bank since we were busy in our quarter end and H1 audits. And now, tomorrow only we are taking up with the World Bank this issue. We are writing them on that. And as well as we'll be sending a clarification to the exchange on this regard. And I would like to ensure everybody on that there is no business which is going to be affected because of this. Because as we don't have any issues and we don't have any business. Also, I would like to add that if look, this order which was up to 2020. We have concluded in 2022. Last batch of payment we received in April, May 2026, 25. It means this year only. If World Bank had any issue, they would have stopped our payment. But they did not did it and they come up with this now in November. So we also need to address it very categorically, very clearly. And I would like to tell you in past also, TRIL has came up strongly whenever such issues has come up. And this time also we will rebound greatly. Don't worry about that.
Okay, sir. Thank you, sir. All the best.
Thank you. The next question comes from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunities. Sir, regarding this World Bank, I think the World Bank integrity...
Sorry to interrupt you, Mr. Bala Subramaniam, but your voice sounds muffled. Can you please speak through your handset?
Right now it's fine, madam.
It's still muffled. Please speak through a phone.
Take a minute. Right now it's audible, madam.
Yes, sir. Thank you.
Sir, actually, World Bank Integrity Vice Presidency gathered evidence and issued a notice of sanction proceedings on July 30, I think, which is the final department. I just want to understand, we have an inquiry pipeline which is related to exports nearly 25%. Is there any impact on those export-related pipeline last 4 to 5 months, and how is current pipeline is there? And what is our concrete strategy to balance both domestic demand with the higher margin potential of exports?
Bala, first of all, I would like to tell you that the inquiry line what we have as on today is 90% to say 85 to 90% is the indigenous inquiries, right? And all other inquiries, which export inquiries are there, there is no government entity or there is no World Bank funded or no any other funded project is involved into that. So it is not going to have any impact on us, rather on the value or on the margin side or any other side. Yes, it is the matter related to the image of the organization, which we are going to take up very, very aggressively with the World Bank. As they said that they have sent a letter to us, they mailed to us on July this year. We haven't received that. So we are going to ask them that whatever the things are there, we are ready to work with them. And if you see in that letter also that they have mentioned it that we less cooperated with them in past if anything has come up, right? So we are strongly believe that this will be resolved very soon. And as far as the business is concerned, it is not going to affect at all on that.
Okay, sir. So around the 35 to 40% of revenue comes from specialty transformers, like furnace or rectifiers. These segments having higher margins. And what are the strategy to grow in this segment? And is there a cross-selling opportunities with existing power transformer customers? And how does the growth outlook of course steel and steel sector, like the major key consumers of furnace transformers impacting this segment profile?
But sir, I would like you to address this, please.
Sorry, Bala, I couldn't get your question clearly. Please, can you come back again?
Sir, he wants to understand that special duty transformers, which is our specialization, how is the outlook of that business?
That business is currently looking very lucrative. There are a lot of projects that are coming up in certain countries which require these special duty transformers. And apart from one of our other competitors from Italy, we are the only qualified vendors for this. So the inquiry pipeline for this is close to about 400-500 crores.
Okay, sir. Sir, we have guided here 85 to 90% kind of utilization by this year. These are and utilizations. I think we are adding nearly 22,000 MVA of new capacity. And if you could share, is there any risk of execution bottlenecks in terms of project delays? And when we can ramp up these new capacities?
So the Changodar capacity is slightly delayed by 1 quarter. But once the Changodar capacity is up and running, I think by end of this quarter, we should be very fairly will be placed at a very high, because we have orders on those also, and we are currently holding ourselves not to take orders as long as the capacity is not completely up. There are certain unforeseen reasons because of which we have had some issues in completing that project.
Okay, sir. So my last question, we are expanding into CRGO processing unit and other.
Bala, can we please allow others to have a question? Can you come again, please, sir?
Sure.
Because I'm seeing on the screen there's a lot of people are saying that why one person is having so many questions. So I hope you don't mind.
Yeah. Thank you.
Thank you. The next question comes from the line of Gayatri from Amity. Please go ahead.
Moderator, can you please ask everybody one question at a time so that others can get it? Okay, because we have almost 480 people in this call today.
Sure, sir. So this is a reminder to all the participants that please restrict yourself to one question only so the management is able to answer everybody's question. Please go ahead, Ms. Gayatri.
Hello, I'm audible.
Yeah.
So, sir, question is related to the business. I just want to understand, do we have any pipeline updated with World Bank for this 5,000 crore? Do we have any addition into that?
No, there is nothing.
As you mentioned that since 2023.
There is nothing in our order pipeline related to World Bank.
And not in our inquiry.
So we can say that the entire 18,000 belongs to India only and some other locations apart from World Bank.
Yes.
Okay. And sir, do you have any update? Yeah, I got it. So, sir, do we have any other update related to this quarter as our profit has been reduced by drastically? So it will cover in the next quarter for October, November, December? Do you think it? Or still we have some issues with the books?
एक second, Chanchat. Guys, one of the reasons why we have also, there is some downturn in the profitability is because we have given ESOPs to our people, and that is one of the reasons we wanted to make sure that everybody is now aligned in the growth of the organization. So organization-wide, we have taken a decision that we will give ESOPs to everybody, and so that everybody is aligned, and that is the reason why you see some downturn in the profitability.
Okay.
Gayatri,
I do have one last question. Can I go?
Gayatri, just to add up what MD has said that and what is your question is that, look, this is one of the quarter. In a long term, when we're talking about a long term growth in long term business, one quarter can come like this where we have a less margin and less profits. But in coming quarters, the profit will again bounce back onto the levels what we have been achieving last 3-4 quarters. And I assure that in these quarters, the profits will be much higher. You don't need to worry about that, right? There is one addition has started in this from this quarter in our company's books is that which may have the impact on the bottom line is that earlier August the company had issued some stock options to around 26 lakhs plus stock options to its employees. And as per the India's guidelines, we have to make the provisions for the expenses which will be having once the options will start getting vested. So around 3.76 crore rupees impact will come on is coming into the bottom line on that, and every quarter it is going to come up. So we will be from next quarter we'll be working on that. That because of some good operational efficiency and some good other returns, we should be able to minimize that one.
Thanks. Hope so, because I'm invested in till since it was trading around 50 rupees. But today I'm getting some fear. Apart from that, we had some issue with the government body last around 3 or 4 years back with some certification issue. But I am pretty much sure that company will come up with this issue again with the profitability. But hope so that should come up on the early basis by next quarter. Thanks, sir. Thank you for your support and help.
Thank you.
Yeah.
Thank you. The next question comes from the line of Shubhadip Mitra from Nuvama Wealth. Please go ahead.
Yes, I just wanted to understand that you did mention that the guidance for this year, we are now looking at a number of around 2,500 crores, which is a cut from what we were expecting earlier. how much of this guidance cut is because of the delay in the Changodar facility? How much is because of the deferment of certain projects that you mentioned earlier because of shortage of components, etc.? And how much of this do you think can be recovered of the rest of the year? And on similar lines, if you can also talk about some color on next year, which is, let's say, FY27 and 28, how do you see those numbers panning out? Thanks.
Okay. Subhadeep, very well asked this question. Let me tell you that first of all, because of the Changodar facility, not much impact has come on the revenue guidance of earlier. Say around 10-12% should be the impact of that. The majority of impact what has come because of the shortage, because of the short supply of the raw material, particularly on the CTC and bushing side. Look, when last year we were not getting the CTC from the indigenous customers, we started importing them, right? And we were the first company to start importing the CTC and using it here into the indigenous customers. But what has happened only this quarter, the government of India has come up with the requirement of the, since the Kutch copper has come up, then copper whatever is importing needs to be basically have the BIS certification. So it took some time to us to make the custom authorities understand that this does not, the material what we are importing does not come under that purview. And because of that reason, almost 12 jobs of ours were stuck up for quite some time in the custom clearance. And then we with the help of the other authorities, with the help of the Power Grid letter, we should able to convince these customs to clear them up. So that has impacted for the business side. So this is going to be basically sale. Not that much of the trains into the requirements into system is coming up. We are trying to recover as much as possible in the F2, but you should understand the jobs are jobs which has been made. If a job is not, this product is not one day made, it's required 35 days to make the product. So say that is the reason we are saying that we will be losing somewhere some business this year. As far as the next year is concerned, we are very optimistic about the next year, and I don't think that anything going to be changed in the next year. We will be completely on track for the next year business.
So can I assume that next year's number, if I remember
Subhadeep, I think next year numbers we will tell you in this quarter's board meeting first, and secondly, adding to what Chanchal has said, from what I have seen, Changodar plant has made a dent of about 25-30% in terms of loss of production, which we will be able to make up in this month because the plant is getting much larger. We will be able to make some of it in this quarter, in the next quarter.
Understood. And with regard to the bushings and the CTC short supply, because since that supply is not in our hands, can that remain a challenge going ahead?
So, Subhadeep, by December or I think September next year, we should have our own CTC plant, which would be doing about 1,500 tons a month, up and running. Our RIP and bushing plant also should be in June. First production should be starting in June. So with all that in place, we should have relatively less issues about CTC and bushings next year. Even our tank manufacturing unit should be up and running in August. So all our new projects will be up and running very soon.
Understood. Thank you.
Thank you.
Thank you. The next question comes from the line of Ashish Soni from Family Office. Please go ahead.
Sir, your 1 billion aspiration target by FY28, what are we doing to achieve that, and any risk mitigation plan, like as you said, your current expansion unforced circumstances is there. So what mitigation steps are we taking, and can you highlight on that?
Ashish, The 28, 29 target still remain the same, and we are 100% sure that we will be achieving that target. Right. Look, the whatever risk we have foreseen in, look, whatever risk we have foreseen, we had already started working on them with having the backward integration facilities at every year in that way, right? And we hope, as I just MD had just explained, that by say the quarter three of next year, all these facilities will be in place. So that to achieve that target, there is no problem we will see into that. Yes, this quarter, I would like to add that why the Chamudar facilities got delayed in result. The one very important aspect of this, that in this year, the rains are so huge that almost for 2 months we did not have any work in that plant. And then the equipment got supplied because of that, this rain and all these things. So which is basically was not in our hand. So we are trying that ASAP we should able to conclude that those bottlenecks, and we're working out on that. Regarding the material mitigation is concerned, that whatever CTC problem we had faced, we have overcome that. Now customs understood our things, so we will not have any other problem. And bushing is that we are trying to overcome with finding a new market, new customers, new suppliers of that. And we are making that the government utilities should accept those products. So that way we will be able to mitigate that. So 28, 29 guidance, we don't see any problem there.
Just add on to this, do you think you can achieve 5,000 crore revenue next year if your guidance holds based on whatever you are telling just now?
I am optimistic in that. Just now, the MD sir says that when we come up in the next quarter with you, we will give you the firm numbers of next financial year.
Okay. Thanks a lot.
Thank you. The next question comes from the line of Mayank Chaturvedi from HSBC. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Sir, on the revenue guidance cut, may I ask, due to this dispatches getting delayed, what are the liquidated damages that we might be looking at from the customer due to these delays?
Mayank, my apologies, I missed you in the morning. First of all,
that's all right.
I was in a flight actually. Mayank, look, what has happened that this delay is not because of the other issues. Particularly, delays are there because of the site readiness and all other issues, right? And the liquidity damages wherever the delays is there, particularly with the power grid, as we are basically we are already accounting for them, and we are also in touch with them to basically come out with a solution where if there is a product is delayed from our side, there is a product which is getting delayed from their side also once the site which is there. So कुछ ना कुछ amicable solution निकलेगा, and the liquidity damage are not that much. We are already providing them for, right? So it won't have any impact on our profitability side. That much I can assure you.
By when you say you're providing for them, you mean you've taken provisions for it in this?
Yes, we always, as per the interest guidelines, our auditor insists us on for the any delay supplies, provisions and all. So our company have a practice to take care of those provisions. And also when we quote to the pricing and when we quote to the customers, we already take the risk alignment in discussion, and that is already inbuilt with the price what we give it to the customer.
Okay. And so on the ESOP cost, can you tell me how much of it was recognized for this quarter?
3.76 CR.
Okay. No, that's and so I've seen the balance sheet, there is a reclassification between non-current trade receivables and current trade receivables. It was about 340 crores in non-current that margin. Can you elaborate on that?
Mike, all these non-current debtors receivables are basically the retention money which is lying with the customers, which they give us in project completion. And whatever retention money is beyond 6 months, it has been taken into the non-current phase.
Okay. But I see that it has been declassified for margin also. Is why I asked.
Yeah.
Okay. So you expect that to get realized. Okay. And last question, so on this World Bank department, they also say that any MDB funded projects, this department will be followed by other MDB funded projects also somewhere on those lines. So do we have any projects in our order book or in our pipeline right now which are funded by any development bank?
Mayank, basically, let me explain to you and all, right? World Bank or these kind of the entities are basically mainly funding to the projects which is of the African countries, right? Where the African country does not have the money with them, and they go to the World Bank or ADB or anywhere, right? And and most of these projects are either on the site delivery basis or delivered at the client side or the execution, everything involved into that. If you have been following it up in say in last 3 consecutive calls, we affirmed that we have stopped quoting on the delivered at site businesses on the export orders. Any inquiry which is coming to that manner, we have stopped that. Because it takes a lot of time, our capital gets involved into that. Whatever export opportunities we are offering, we are either offering on the export basis or FOB basis. So this is basically, this will have no impact on us at all. In our present order book, there is no business which is of the government entities of any of the African countries or any of the countries, right? And in inquiries also, there is no such inquiry which is of this kind. Fundamentally, company has decided that we will not go beyond 15% on the export side. Fundamentally, we have decided we will not quote any CIF or FY delivery export orders. And fundamentally, we have decided that we will be more focused on the payment cycle rather than on the volume of the business. So this particular department will not affect anything on us. In fact, we are surprised that why World Bank has come after 2.5 years for that. That is the reason.
Okay. Thanks for the clarity.
Thanks.
Yeah, those are my questions.
Thank you. The next question comes from the line of Anupam Goswami from SUT Life. Please go ahead.
Hi, sir. So my first question on the revenue guidance that we have had, how does the opportunity falls into that? How much of a volume we can make out for the rest of the year?
Anupam, there is background sound is there for you. If you can just mute it down and then somebody's talking, I think, around you. So I cannot hear you.
Yes, sir. So just, sorry, sir. Is it better now?
Yeah.
Okay. So, on the revenue cut, how much of a Changodar facility revenue are we building in second half? And about another 22,000 MVA that we are targeting, what sort of expansion timeline we can see?
Anupam, the 22,000 MVA we are coming up in the Moraiya plant, right? And that 22,000 MVA, I just MD said that it is in line. And we can say that from fourth quarter, this will be completed. And revenue impact for this start coming from the Q1 of the next year, right? And the Changodar side is concerned, as presently around, as he said, around 20-25% revenue loss is there because of the delay. But in coming months, that is going to be mitigated on that line. So from next year onwards, both these things will be into that.
Okay. And sir, when second half, how much of a margin are we looking at targeting? Because this time the execution also was lower and some deferment has happened. I'm guessing from now onwards it will recover and So hence, should we go back to our margin what we delivered in the last previous quarters?
Definitely. We will be near there. And we will try to better that.
Okay. Okay. Thank you, sir. I'll join back.
Thank you. The next question comes from the line of Samarth Khandelwal from ICICI Securities. Please go ahead.
Hello, am I audible?
Yes, Samarth.
Yes, Samarth, you are audible.
Yes, thank you for the opportunity. Sir, my question is on margins. So to exit FY26 for the 16%, I'm looking at around 300 EBITDA we'll have to do in the next quarters. So what factors make you confident in achieving? Could you go over the factors that help you be confident about achieving this number? And also, secondly, what order book do you look at when exiting FY26? Thank you.
Samarth, order book, I think the MD in his speech has addressed this issue. That from the beginning of from the beginning of the first board meeting of this year, which was related to the Q4 of the last year, we said that when we close this current financial year, we should have an order book somewhere close to 8,000 crore rupees. And we are hopeful that we are sure that we will be having that order book. Coming to your second question is this, Samarth, there are the two fundamental things I would like to address with here. The first of all, the confidence of getting that margin is my order book. Right? The order book, what I have is on a very significant gross margin. So that will be the first parameter. Second parameter is this, that the operational efficiencies. If I build more and if I supply more transformers, my operational cost is going down. Right? My fixed cost will go down on the MBA basis. So that will automatically add up into my EBITDA margins. Right? If I just give you a small example here, that almost 80 crore rupees of the transformers we could not able to took into the revenue in this quarter because the government sites were not ready because of the heavy rains. If those were into my revenue in this quarter, my EBITDA margin would be somewhere near to close to 16%, because these are the high volume business and my operating cost goes down because of that. So same levels, the same thing which is I am confident in this quarter. Right? The more I will produce and supply, more I will have the margins into that. And presently we are, as MD has expressed in his meeting, that last batch of old orders are now almost finished up. So now whatever order book we have is on a significant good margin. So that will be the biggest confidence for us to have into to reach into the old margins rather bettering up.
Okay. And so, any anticipated, because of the raw material which was unexpected in this, why would that not happen again if I have to factor that in?
So Samarth, we have already worked on it, and as Chanchal had explained to you earlier, we had imported CTC for few reactors and transformers, but because of the delay in custom and explanation to the custom why we need it, this issue had occurred. Now, since it is a process now and the custom is also aware of how why it is and how it is, the delay should not be there any further.
Okay. Understood. Thank you. I'll get back in the queue.
Thank you. The next question comes from the line of Viren Deshpande from Alpha Peak Investments. Please go ahead.
Hello, sir. Hello.
Hi, Mr. Deshpande.
Hi. See, actually, the inventory in this quarter, as you rightly mentioned, is about 155 crores. And normally we have an inventory hardly of 2 crores or about 15-20 crores. At the end of the year also, we had an inventory of 49 crores. So, as you mentioned that there were delays in execution and the billing. So can you quantify the impact of this in this quarter sales? Had we had the normal inventory?
Mr. Deshpande, just let me explain you or elaborate it more further, right? If you see my inventory, in my inventory we have 226 crore rupees of the advanced WIP, and we have around 79 crore rupees of the 80 crore rupees of this finished goods, right? We generally don't have any finished goods or hardly any finished goods at the end of the quarter because we planned it accordingly so that our FD does not line here, it got built, right? So that's a very detailed process of planning is from our side that if it is a FY delivery, the longer distance supply job should go first. So that by the end of the month it should reach to the site and we can recognize the revenue, right, sir? If that case would have been not there, my inventory of WIP as well as the finished goods would have been would have been around 225 crore rupees instead of 310 or 320 crore rupees. So would have been 100 crore rupees would have been add up into the revenue.
And in which is
immediately getting added
in this quarter.
Sorry. Yeah.
So you expect this 100 crores turnover which has been postponed in this quarter, which will be built in this quarter, apart from the normal growth you will be having in the third quarter and fourth quarter.
Yes, sir. Yes.
And now the capacity utilization last time you mentioned was hardly 65%. And this year, due to these delays, the capacity utilization must have fallen further, no?
Yes, sir. Yes, sir. As of particular in this quarter, it has gone down. But we are targeting that once we close this year, we should reach around 70% levels.
70%.
The other thing is we have already manufactured these transformers. These are either in transit or lying somewhere close to the site, and because of non-availability or because of the infrastructure issue that the roads to the site or the roads to that specific substation have been washed away, there has been an issue. So, if you look at it, operationally, we have made these transformers. It is just that because of certain processes and certain rules and regulations, we could not build these transformers.
Yes.
Right? So the operation is still at 65-68%, but because we could not build it, it is showing less. So in this, by end of this quarter, you should actually see whatever we lost in the last quarter will come up in this quarter.
Yes, sure. So that 100 odd crores or something more than that will get added.
So operationally, the efficiency or the plant utilization has not gone up or down. It is just that there are certain issues which we could not address or which could not have been avoided. We are having this issue. So overall, the whole year would look approximately this at 2,600, 2,700.
So on that only, you mentioned that currently our order book as on 30th September is about 5,500 crores. 30th September order book.
Yes.
Because in the presentation 30th June is mentioned 5,400 something. So on September end also the order book remains the same 5,500 crores.
Yes.
No. Let me clarify. My presentation, I think presentation maybe it is instead of 30th June, 30th September, it might have written 30th June. I need to see on 30th June our order book. Look, the thing is, my order book as on 30th June was something around 4,400 crore rupees. I have executed around 4,500 crore rupees of the orders, and I got new order of around 600 crore rupees. So 100 crore rupees difference has come up into the system.
So the order book as on 30th September will be how much?
5,500 crore.
about 5,500 crores. And we expect to end the year with a order book outstanding of about 8,000 crores. So we expect almost 3,000 or plus crore orders in the second half. Is it correct?
Sir,
Yes.
sir, if you see my last year.
Wait a second, Chanchal. Viren, see,
yes.
we have this quarter also, we have executed some orders of the previous years that have come with low profitability, and we have learned a lesson that nothing beyond 16 to 18 months we want to book. तो अभी 2.5 साल का बुक करके फिर वो एंड ऑफ द ईयर 3 साल के बाद आप पूछोगे कि इसमें ये इतना प्रॉफिटेबिलिटी क्यों कम आया. So we are taking a conscious call that we do not want to book anything which is beyond 18 months. 18 months is also the process.
Right. So about 5,000, 6,000 crores.
We have to take some conscious calls so that we are efficiently running the organization.
Right. So around 6,000 crore order book will be a good target to have order book, because that will be about 2 years or 1.5 years. That will be the reasonable way. Because the margins is very important instead of only having the orders.
Exactly my point. So we want to, curtail our order taking right now, so that we are sure that whatever we are taking is executable and there are no LD charges on those orders also.
Yes, because the delay leads to inflation, and again, if you don't get escalation in your orders, then that becomes a problem and then a disappointing thing. Instead of that, it is better to have reasonable order book instead of having very large order book and not executing anything. So, in this backward integration project of CRGO, which we had initiated about 6 months back, that is going to help us in increasing our operating margins by about at least 2%, it was mentioned. So is it likely to happen in this year, or it will happen sometime next year?
Mr. Khandelwal, it is not only the CRGO, it is basically all the backward integration activities are going to end up 200 to 250 bits in our business.
But when it is likely to happen?
Well, sir, say next year effect will start coming up.
Next year, from Q1, etc.
Yes, sir.
Okay, sir. Thank you and all the best.
Thank you.
Thank you.
Chanchal, we will take last few calls and then we'll end the meeting. Chanchal?
Yes, sir.
We'll take last few calls and then we'll end the meeting, please.
Yes.
Thank you.
The next question comes from the line of Roy Menes from Flagpoint Capital. Please go ahead.
Hello, am I audible?
Yes.
Just a very basic question. I just wanted to understand that what was the reason behind, letting go of a Big Four auditor and appointing an internal auditor as your main statutory auditor. Any plans of going back to a Big Four or a more reputed firm?
Sorry, I did not understand your question, sir.
I'm saying, just wanted to understand what was the rationale behind, going from a Big Four auditor, statutory auditor to your internal auditor who has now become the statutory auditor. Any plans on going back to a Big Four statutory auditor?
My internal auditor is Ernst & Young, right? And my statutory auditor is one of the largest audit firm of this country, right? So the Big Four we had long back with us, and on a rotational basis we keep changing the statutory auditors. Right, sir? The present statutory auditor is one of the most reputed auditors in this country, and internal auditors, as I told you, is EY. So there is no basically leeway from the company that we have moved away from our company.
Thank you.
Thank you. Ladies and gentlemen, we'll take that as the last question for today's call. I would now like to hand the conference over to the management for closing comments.
Chanchal,
yes, sir.
Closing comments, please.
Yes, I would like to thank you everybody on behalf of the Transformers and Rectifiers India Limited And I would like to also assure all of you that company is into the very right direction. You don't need to worry about a small hiccup which has come in this quarter. This is in a long journey, these kind of small hiccups keep coming. And I would like to make all of you comfortable that the organization is working for to build up a great organization which is going to come up in very near future. And I would like to thank you everybody for supporting us and request you to keep support us in this entire journey. Thank you very much and looking forward to see you soon.
Thank you all.
On behalf of Nuvama Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.